Good evening, everybody. I hope you can hear me well, and a very good evening and another interesting topic that we're looking at, also covering both from the Malaysian market as the US market. So thank you for joining me tonight. A very good evening to all of you. Hope you all have settled down nicely in here, and for another maybe less than 45 minutes with a little bit of question from you all. And if you want to ask any question about regards with the market of any stocks, I'll be happy to just pencil in there. And of course, tonight we'll be talking two sides of the story, the US and the Malaysian market, and we do appreciate if you could share this video in your timeline, as all things being what we said in Trade VSA, the more we share, the more we will benefit. All right, so thank you for sharing in here. Thank you for coming in, and let me do a bit more sharing on my group, and I do hope that you can pass this good video in your discussion group. Do recommend some friends to our and colleague to our Trade VSA trading idea in here. The more the merrier. That's right. Now of course we'll be happy to look at any challenges that you have this year, and not pertaining just to the overall market. I think there's a lot more going on and what we see in the market, lots of opportunity, as many people are still pretty much in a slumber mode. Means they are not waken up yet, but once you wait until the market starts to rally, then people are asked, is it too late? And again, we don't want that kind of thing to also happen in here. All right, thank you for sharing in here. And let's go on to what we have for you tonight. All right. Thank you for coming, everybody. Thank you. All right. Welcome to the live FB at Martin TF1. This will be 3 parts of our series preparing the next big move in the KLSE as well in the US market. Now take note, on the 16th of February, which is tonight, and then next weekend we'll be doing our masterclass. So definitely my time will be spent with my masterclass student in here. We will start probably on from 9:30 to 12. We'll be trading the US market and showcasing you some of the particular setup that we like, and also using the trading tools that we have and looking for the good reward to risk. Don't miss our masterclass, which is coming up this Friday, Saturday, Sunday and Monday, and also next Wednesday. For following 2 weeks from now, we'll be doing our trading investing, which is better for you. That will be on the 2nd of March, going to the 2nd March, and the 9th of March is building a winning trading plan. All right, so all those are in store for you. So buckle up your seats as we move on to the big move that we see in here. Of course, this is a disclaimer in here, and what has happened is I've been getting a lot of calls recently, just prior to the weekend, is has the bear market come to the Wall Street, right? To the Wall Street in here, because we've seen the big drop that we have, almost 10-12% in here, and there was always been talk about interest rate hike, 4 interest rate hike, 5 interest rate hike, and now 7 interest rate hike. And not to forget, over the weekend, President Biden came in and said, I remember on Friday night, that the Ukraine is likely to be invaded by Russia, right? And the market on Friday night took a big fall that we've seen, down 500 points. And then coming up on Monday, and today's Wednesday, they said that they are going back to the table. So this will going to be talked about, but I'm going to give the facts straight up to you, and you will decide whether the bear market has come into a market or not. We always need to look at the fact. I think many of you who are unskilled, and some of you who have not been well trained, usually fall to the temptation of fear. We always talk about fear of missing out. And today also, in this morning, in the breakfast show, I did talk about some of the particular, so make sure you catch it, or catch my morning podcast on the Trade VSA trading ID in here. So all being said, let's look at what we have for the market for you. Now, knowing that in mind, that market has fallen a fair bit, we actually went through one whole live talk about how to identify good stocks and the sign of marketing bottom up. I think I shared some of those reasons, including last Saturday, right? Last Saturday where we did our market preview for our masterclass. So those are the few things I talk about. But of course, in our masterclass, that's where we'll be talking more about the techniques. If you have not attended our masterclass, this is definitely something you must come for it. But if you are our past graduates masterclass, please, we are starting up this Friday night, Saturday and Sunday, and definitely we have new material in here that will put you to be one of the skilled and professional trader if that is what you wanted. Don't be the unskilled people out there, because unskilled usually they will tend to do not so better. The choice is definitely yours, and I think given the choice, it's always best to invest a little bit of time, a little bit of money to get more skill up when the opportunity strikes. Do you agree with me or not? If you do, give me a thumbs up in here, so I'll make sure you guys are paying attention in here. All right, let's also move on to the trade VSA that we introduced way back in November. That's right, November 2022, and November 2021, and it's been gaining traction. We've been getting great feedbacks, and we also have a timeline release for VSA Trade 360 dashboard in there. So make sure you check it out and find out what are the latest. But of course, tonight I will also showcase some of our latest VSA peak value line, which in turn does help me to make some money on FCPO trading on both on the long and the short side. And we are really exploring some of the trading rules that you can actually use in your own trading. Just imagine 20 to 30 minutes can able to make 500 ringgit. That's right, 500 ringgit, or at least 20 points from 3 or 4 trades, just about that. And that's what we wanted to do this coming Monday too, using the peak value as well as market stages, which we believe a small fee to pay, but plenty of benefit to come. All you have to do is practice, and our coaches with our 30 years experience in here will be here guiding you, right? And that's the benefit that you'll be getting. And of course, our VSA 360 that we see here continue to getting great feedback in here. And also there is a link below on the feedback to improve our SmartRobie services. If you can have time, we really appreciate you can go over and give us your feedback so we can give the best possible benefits to you too. And of course, more benefit to come is our market conference, which we are promoting right now on the 12th of March. Okay, on the 12th of March, we have two international Wyckoff guru, which is Ramon Bogomozo, as well as Dr. Gary, as well the CFO from Kellington and also Macquarie. So make sure you catch us on that one, and this will be a very intuitive, a very short 9:30 to 1 a.m. and I think most of you can block off on there. You'll be will be broadcast live on our Zoom in here, and the market conference is practically free. That's right, it's free. All you got to do is activate your monthly pass on your SmartRobie and you will able to get the link there. All right, so make sure you get that. All right, don't forget to subscribe to our YouTube channel for all our video in here, and also our SmartRobie continue to be updated. We also be releasing a new feature on our SmartRobie in the upcoming March 12th in here, and check it out in there. And we will also showcase and talk about it as the day comes out. Few more things that we'll be launching also on March 12th in here. And for tonight, our live Facebook, our focus is always been on the bear market. So we need to clear, make it crystal clear that this is not a bear market that we are coming up. We are having market correction. And what are the things that you should look out for? I think last Saturday we started to talk about a few things from the US standpoint, including wicks, including double bottom, looking at the price, looking at the volume, looking at the peak value in here, and also looking at the two military machines we talk about, right? The submarine and the kamikaze drive, and then later on you get a rocket. Now if you get my mean in here, those are some of the analog story, right? We are trying to tell our user in here, don't be so fearful. That's a lots of opportunity in here, and fear is nothing more than just a short experience that will pass. So you can always have a awakening if you have the right knowledge, right, and the right guidance in here. And we do hope that we are here able to provide you the guidance in here. Also, we're going to be looking at growth sector, good opportunity right now in here, and also the US market, right now the US market. What is it doing now? What are the stocks that we are able to look at with our VSA 360, including both TA and FA? That's right, including both TA and FA. So those are the things that we want to be looking at, and definitely let me just get my SmartRobie ready, because we will be using SmartRobie for the US market too. Okay. So having said that, if you have any question, just pencil those in here. I'm happy to answer them. And if not, let's get on to the journey to find the right stock for the US and Malaysia market, right? Being ready for the big move. Now, what has happened is that the so-called question that comes up a lot in many of you is the sell-off that we have, and also the flattening of the yield curve. All right, the flattening of the yield curve has been a real issue, because this again pops up in the news, and a lot of the talking heads are talking about the yield curve flattening. Now, the yield curve flattening, it's a phenomenon that we use in the economic to determine the likelihood of the next 6 months to 18 months whether the stock market is going to be bullish or bearish. Now, the flat yield curve started to flatten, and we're going to go into that later on, is because due to the 5 or 6 interest rate hike that they were talking about it. So it's such that this has caused the long-term interest rate to fall while the short-term interest rate risen. That means people are bullish or bearish about the future, right? Interest rate fall in the future, in the further months. When they fall in the further months, we are talking about 10-year, 20-year, 30-year. That means people are bearish about the market. So when you have further months or further years, interest rate fall like the 20 and 30-year, that means people are not confident about the business going forward in the interest rate. So they likely to put more investment in the shorter term rates. That's why we see the shorter term rates goes up, the longer term rate comes down, and that's why we have flattening. Now, the next thing you will hear a lot of flattening will be the yield curve inversion. Now, the yield curve inversion is a term that they use normally to denote that the market is really turning bearish. Okay, so when the market turns bearish, there's a few things we're going to be looking at, and definitely tonight I want to talk about that. So I want to make sure that you guys are crystal clear and able to take note of the opportunity that will be presented to all of you in here. So usually when you see yield curve flattening, the next thing a lot of the talking head or speaker will be talking is recession coming, recession coming, recession coming. So let me get you prepare you first, so you will know what are the things starting to come up first. Okay, but let's look at the reason why we talk about whether a recession is coming or not. Now, if you look at the yield curve, it's definitely bearish, and this is what we talked about early on. Let me just switch on to my laser pointer here. So you can see from here, this is where the 20 and 30-year interest rate, so it flattens. So if they are confident, right, the interest rate supposed to go further up. That means they are bullish. Right now it's flattened up, and it will eventually go inverted. When inverted, this is what it means. All right, you got inverted, flattened, and this is steep. Steep yield curve is the best. If you have a steep yield curve, that means market is turning to be bullish in the coming months or weeks or years, because they are positive about going in. But of course, right now, talks have been saying whether the interest rate hike about the 50 basis point, which is 0.5, whether that will cause the market to go to recession. But let me make it crystal clear to you. The facts are there. Do not listen to anybody who claims to know about the stock market until you look back at the factors that they have. You just can't look at one or two conditions. You can look back the last 5-6 years. That's why we at Trade VSA want to present our facts to you through our VSA 360, so you are crystal clear. Remember, an ignorant investor will definitely eventually lose all or most of its money in here. So let's plot our first point. Now, on average, it will take 5 months, okay? It will take 5 months before the yield curve inversion, that is, the equity will peak. So what it simply says is that, right, usually when you start to see inversion, we haven't seen inversion yet, we're only seeing flattening. After flatten, it will invert. After invert, 5 months on average, that's where the equity will peak. So a lot of people are talking about, hey, when is a recession coming? When is a recession coming? But I'm going to show you past history, right? If recession do come at all, it is likely to be 18 to 24 months after the yield curve inverted. So that is usually going to be after the 2024 election. That's right. The 2024 election, which is the between either Donald Trump or Joe Biden in here. Again, I will be here to take you more when we get to 2024. I will still be here compared to most people may have gone and do something else. But the love for the stock market, in my sense, it's too great for me. And I really enjoy your company, most of you coming in here to listen to me tonight. All right. So after that, what we have is looking into the likelihood sign of toppish. No doubt, that's right. We are getting, market are getting toppish, or maybe getting ahead of it. And that's why we have recently the market pullback because of the interest rate rise in here. But it is not recession in here. Let me repeat that again. Market will always have sharp decline, what we call corrective pullbacks. And the pullbacks is something that we are seeing right now, the 5% and the 10%. And I do think our KLCI, after hitting 1600, we will have another correction coming very soon. On the FKLI futures, we've seen the market has gone up 6 or 7 consecutive bars in a row playing catch up. But I still think that the pullbacks is coming. And for those of you who have not been in there, learn to read this pullback. These pullbacks are opportunity to buy on dips. Okay. Now, how many of you agreed what we just said in here? If you do, give me a thumbs up in here, because it's important that you understand that market do correct, and market corrections are always good opportunity for you to buy. Now, let's talk about further about yield curve and recession in here. When yield curve are bearish, this is why the market is tumbling down. This is going back to year 2020. The gray line that you see here are recession that was faced in United States, United States market in here. So you will see that the yield spread between the 10-year and the second year usually goes up. You can see that, right? Even at this junction, when COVID crisis came, the yield curve was inverted up, this way. So let's go a bit more closer to where we are in 2020. So you look from here onwards, up close and personal 20, the yield curve, the yield curve spread, okay, actually made up higher here, actually gone up. And that's the gray line here. That's where we have recession. So right now on the 2022 January and February, we do see the 10-year yield spread are actually going lower. So definitely this, again, I repeat, it's not market recession that we are going to be experiencing. It's just market decline that we're seeing. The market is correcting, except maybe it gone out a bit of 10% or more, even up to 15%. But of course, in our VSA 360 seasonal monthly trend, I have talked about it in length already in here. So in short, what we are seeing that we need to have the interest rate yield to go up to see recession. But right now, the trend is down. Definitely is a no-no. All right, on another indicator that is used by the on the US side is the conference board leading indicator index, right? And you can see the months that it will peak before the recession. Now going back to 2019 and 2020 here, right? This was January 2022. You can see this recession peak, and then we have this 2019. This was the the COVID-19 in here. So right now it's just starting to peak. So it hasn't reached yet. If you go through this junction, it probably shows you that the market need to peak first, right? Means you have a flatter curve right here, 100%, very close down. It's not yet, because still a lot of people out there, right, don't want to work, because partly they don't have confidence, or you have heard of what we call the Great Resignation in here. All right, and let's talk about Joe Biden. Now, Joe Biden, is he Sleepy Joe or is it hyperactive Grandpa Joe? What do you think? Let me know. Just type it inside there. Do you think he is a Sleepy Joe or Grandfather Joe? Right? Sleepy Joe or hyperactive grandfather Joe? Right. So let's take a look about it, right? Of course, many people will talk about differently. And here's a cartoon about the strong-arm, strongman Vladimir Putin threatening Ukraine in here. And Joe Biden finally did what he did. I dare you to invade Russia. That's why he's been telling a lot of the press conference in here that Russia is likely to invade Ukraine anytime and including this week. But of course, Putin backed off, right? Putin backed off and they are back into the negotiation table. And you also hear right now the troops are pulling out, and yet Joe Biden administration still saying that they can also invade yesterday. So a lot of the news that you watch on CNN, did US actually got wrong about their intelligence that Russia will invade Ukraine? Now think very carefully. Joe Biden, I think he is an active Grandpa Joe, but he's not hyperactive. Okay. Now I do think that he has his arms full, definitely, for sure. Now, whether you're Republican or you're Democrat, depending where you see it, of course, with the COVID-19 and the inflation that is ongoing, he has a lot of challenges ahead of in here. I think he's doing a fair job. I'm not saying he's doing the best of a job, because a lot of the infrastructure bill was also turned down by his fellow Democrats in here. But going forward, he can only be what we call a passing by president. Okay. And if you look in terms of stocks and president, the average of all president 2 year in office, this is what is the current market now. And this is the 2-year prediction, going back to what we see in the history. And you can see right now, this is a correction that we were expecting, to be frank with you. And then going forward, the next 2 more years, when it comes to this coming November, 2022 will be complete of the second of the 2 years. You still got another 2 years. The market will go higher. Now, how many of you believe in the history that has a projection to the future? All right, type it in there. Let me know what you're doing. All right. So right now you can see here, right, the 4-year under Trump, the US Dow Jones, you can see market did have a big fall. Then here, this is the average of the presidential cycle back from 1928 to 2012. You'll notice on coming to the second year, the September, which is this September, will be the lowest. And right now we are in March, right? We dip down in somewhere here. We dip peak, and then we dip down in the January month. So we are actually in the correction mode. But usually just after the midterm election, which is on November 1, we should be able to see a nice rally in here. The 13% rally, that is the big one in here. The average return was only 4% here, right? And we did have a good year last year for the US Dow Jones, which is, I think you're talking about something about 12% in here. But right now, up to now, we are still down a couple of percent, less than 7 or less than 5% in here. But take note of year 3. Okay, so year 3 will start from November 2022, and then year 4. So this is the sort of the schedule of how the stock market is likely to move in terms of the presidential cycle that we have here. Now, of course, looking at this S&P 500, the red is the Republican president. The dark blue one is the Democrats. So you can see from the last round in here, Obama first term has about 84% return. Obama 2 second term has 52% return. Trump has a 69% return, and Biden is just starting only. Okay, only Nixon and Ford 2 terms there was a loss here. So if you are looking at this market, Biden is just warming up only. So where you talk about market crash, market recession, it is just starting its gear in here. You always have to look at the totality of the whole market. Now remember, the US Congress are full of businessmen or politicians who are interested in the stock market. So no way in any way that they will allow the stock market to go through what we see in Bush Jr. This is where he had 2 worst drop-off in the year. Of course, when you have two bullish drop-off, that's why the subsequent year, the market recovered, right? In here. These are 8-year cycle, okay? Don't forget, these are 8-year cycle in here. Okay. Any question, feel free to ask in here. And I do hope the notes that I'm presenting in here does make a lot of sense in. So right now, the midterm election will be the 6th of November 2022. So you notice post-election has average about 2%. That's from 1833 to 2013. Midterm year, this is the year. So we are expecting a mediocre return, about a 4 to 5% in here. Pre-election year, that is the year before the election. And election year, this will be pre-election year. We are talking about 2024. And then election, no, 2023. 2023, correct. Just now we said 2023 will be the big boom year. All right, this year is 2022 here, and then this will be 2024. So next year will be even better year, but we feel that this year, this is 2021, 21, 22, 23, 24. All right, and that's how the market look at. So the common mistake made by amateur when we see this kind of market sell-off is that they look at the figures, but they don't weigh in totality. They don't look at the charts, they don't look at the history, and a lot of time they cannot differentiate between sharp market correction and recession. So they only understand one singularity, that is recession only. And they fail to understand the implication of US economic and election cycle, which I've just talked about it. I hope the information that I presented to you will put you into a right way. And remember, all you need to know is focus on the right path of the road, the US market, and a little bit of opportunity here and there in the Malaysian market, rather than just merely looking at the capital loss, which is a back mirror in here, okay? So when you just look at the capital loss, it's just an opportunity for you to recuperate back your losses in here. And also what I talked about earlier is the unskilled. Many of them are unskilled. They just want to hear this or hear that, and depending the convenience of the time, the convenience of the information. It's always good for you to get your information from the right source and people who you believe that has some good track record in the market in here. Many of them also don't have the habit to unlearn. I think that's a very important point. Unlearn and relearn the whole thing. From time to time, we all get all kinds of junk over time. We listen to here, listen to that, and we never have that opportunity to unlearn. Because we are not able to unlearn, we are not able to invest time and learn. Think about that, right? And that speaks a lot about your current situation that you be in. May it be good, may it be bad, but definitely only you can make changes to improve yourself. And that's why we always tell people, if you want to make that change, the masterclass, it's one of the opportunity that you give us to help you to coach and train you to have a very good return. As I said before, 2022 may not be a big year compared to 2023 based on the US election presidential cycle in here, but that tells you where we are heading. Now, next is to understanding market bottoming and buying on dips for good sectors. We're going to be looking at the sectors of good stocks and also looking at good stocks in bad performing stocks. That's one you want to consider in your watch list. Bad stock in bad performing, that's why you want to avoid that. Good stocks in good performing sector, you want to run your profits. And bad stock in good performing sector, you're ready to switch out. Those are the strategies that we talk. Of course, many of these more, we will talk more in the weekend, right? Now let's look at the example of a good sector, global semiconductors. Now this was on StarBiz 16th of February in here. Talks about the US-based semiconductor industry hit a new high, 560 billion on the 26% year on year. All right. So good sector, that's definitely a good sector in here. All right, but right now because of the interest rate, it fell a bit more and does give you an opportunity. It shipped out almost 1 trillion of semiconductor in year 2021. Demands continue to be big, and China is one of the biggest share, totaling 192 billion. And also remember, ATE, OSAT, and Wafer Foundry continue to be key beneficiaries, and Intel 30 billion investment in Malaysia in here. All right, so let's take a look at some of the stocks that were highlighted in here. All right, now the TA has given a buy call. That's right. Has given a buy call on some of these stocks on the 16th of February, Elsoft, Unisem, Inari, and MPI. So what we're going to do now is to look at the stock, whether it is giving us a good opportunity. Okay, to look at them now. Let me just pull out my okay, here you go. So we are waiting to lock into our VSA 360. All right, let's lock into the VSA 360 right now. So once you lock in here, our VSA 360, it's pretty easy to use. You can just type it in there. All right, just want to make it a bit smaller here. And right now we want to look at Elsoft. Okay, Elsoft, A-L-S. Okay, there's Elsoft here. So you can see from Elsoft, it's a positive cash, low gearing in here. The P is pretty high, you can see. The analysts have it at 86 cents, and that was updated on 25th of February. That was a bit far out, and you can see here, this was a sell call, okay, a sell call which was outdated. But right now, Elsoft have a buy call at 118, okay, 118. And he has exceeded already. So you can see from here, Elsoft. So on the fundamental side, this company, we're going to be looking at it just shortly. So let's look at the 3-month. This is a nice green pentagon. So on the timing side, it looks pretty good. So what we also have here is looking at Elsoft. Has Elsoft turned green pentagon? Look at the Pentagon chart. Yes, it's turned right. So we use the trading view to switch between weekly and hourly. Now also, let's take a look at the monthly. Now on the month of January, this is where we saw the biggest drop. Okay, last year, Elsoft have a big drop 2020, and the 2021 is still ended up with a positive number in here. And if things do go right here, we will see Elsoft possibility getting a positive return with a yearly return of 31%. So right now it's still in a minus territory, just like what we saw last year. Now on the show me the money, right, it actually went up from 10,000 ringgit here when it first started off all the way back to 2008, and it did hit almost 500% and then finally came down. So some of these smaller cap stocks, it's always good to keep in mind that you need to take profit, okay? So what about the fundamentals, okay? Am I looking at the FADO stock? Right now it's not. You could see PE is a bit high, right? 313, I suppose they are looking into possibly re-rating of this here. Pentagon 55%. Chart-wise looks pretty good. Okay, let's take a look at the financial here. Switch on, and we're going to be going to the trading view. So we are here. You can look at Elsoft, and we can look at the trading view income statement. Let's look at the quarterly statement, and you can see quarterly statement is actually improving, and I think that's why they actually like it. 42%, 36%, 11%. So when the margin is increasing, right, this actually it's a good recovery stocks. Okay, and also you can see PE is 300 over time, dividend 1 over here. And what are the other statistics? Okay, let's look at the other statistics here. And here we can see PE sales about 30 times. Okay, 6,000 in here. How about cash flows? Right, return of asset. Okay, it's the return on equity is certainly very, very low for the year 2020. Okay. All things being said, what I do like about this is the gross margin, which is of 45%. This may not be my favorite FA, that's for sure, because the PE is about 300 over times. But what I do like about it is the setup. Okay, now let's look at that at the setup that we have, and we can turn on to our trading view. Okay, let me just bring up my trading view here first. Okay, and we're going to put up LSOF. Switching back to the daily chart. So you can see from here, LSOF starting to make its run from our peak and valley. So the last one we made about 30%, fell about 17% correction, a 14% correction, 35%, 30%. Yeah, if this thing were to hit up, it's going to likely to retest back 116, which is also the 118 PE. So the 118 is an old high. So from here onwards, that's a good area, a pullback. Technical wise, I like this chart. Fundamental, not one of the best. So keep that in mind. Let's go on to the next one. Okay. So that's how I look at it. Next one is Unisem. So let's go over to Unisem here. So Unisem is not bad. Small dividend. Analyst has 27 of October. This is a 490. Unisem latest one is 5 ringgit. Okay, 5 ringgit at 30 times PE. Now it's only 25 times PE. ROE is also very low lah. Not so good lah, ROE. But then the other one you want to look at is also what we talk about, the comparison. You can see ROE Unisem here compared to Getronics. Getronics is actually not bad too. Getronics. And then the other one is Technology. Technology is this one. You can refresh and compare others. Hong Seng. No, let's keep going. Unisem at KSM. KSM actually is much better, you can see, right? The EPS, NTA, and PE. So later on, I'm going to talk about this, right? The whole point is all things being equal, okay? Dividend, the wider the gaps between them is far. So if you want to have this radar chart, you want to see them further away, right? Further away from the center. That means the higher the better here. A point closer to the center indicate a lower value or vice versa. You want to have higher value for dividend, ROE, EPS, and NTA. All right. So let's refresh this. You can see Chrono. I don't like Chrono. CITOS. You can see CITOS. Unisem is not bad compared to all this. Supply chips to normalize here in 2022. Oil and gas segment leave front can. Okay. That was some of the news that we have. But chart wise, you can see here, right? So let's take a look at the fundamentals, okay, the 4-year fundamentals. Again, let's look at the financials. We look at the income statements. Let's look at the there's none here. Okay, trading view don't have this one here. Let's talk about the statistics. Okay, going back to here again. No, it doesn't have any financials. Let's try out the financials here again. Yes, it comes out here. So let's look at the quarterly. Quarterly is holding up 12%, 13 and 10%. On the fundamental, we just done the comparison in here. It does look LSOF would be a better one, but the PE is, because of the margin expansion, the PE is 24 times with a dividend of 1.23. And chart wise, let's take a look at the chart wise here. Unisem. So we're just still waiting for here. And after this, we'll be looking at the US stock. So if you have any stocks that you want us to look at, feel free to put it in there and be happy to look at it. And you can see from here, also making 11% out move here. This is a nice one. Base building in here. You can see also market stages turning up in here. And once it goes up to this zero level in here, that's a really good time to be buying. All right. So let's take a look at the next one here. We have Inari. So Inari here is 2 out of 10. Analyst 28th of December is giving it a 480, which is a 45% upside. And the latest Inari is buy at 425. 425 right now is doing 330. So still get a bit about 30% upside from here. But I do not think that it will always hit that. So right now, if you look at the charts, let's look at the chart for Inari. You can see the market was pulling back right at the double bottom here. So that's a nice one. If it does hold up this level, and the market today peaked back at 2% in here. Breaking up this will be a nice green pentagon. As I said before, the technology sector has fallen, has oversold. Sharp correction like we are seeing in here. And presenting what I've just talked about, the good sector, the demand are still there. There's a lot of recovery in here. And if it does go up like this one here, you could see this is almost a 40% move from this base onwards in here. A potential 40% move from where we are. So that's why we recommend you to use the peak valley lines and also the market stages that tells you the bottom is already there. Double bottom, and we have this so-called higher high market stages of the value here. All right. Next we have is MPI. Let's look at MPI here. So MPI, let's look first of all looking at the fundamentals first. You can see MPI is one of the strongest, and if you even refresh this and you compare to Getronics, it's one of the strongest. Technology and DNEX, right? It is one of the strongest in terms of its fundamental here. 23rd December, $59 is the target price here, and on the latest one is $60.50. $60.50 here. So let's take a look at the earnings. So we're gonna go to the earnings, financials. We click on the right, and here we go. Click that one out. Income statement. Click quarterly. Takes a while for the website to come out. Oh, there you go. Okay, switch to quarterly here, so you can see margins are 31%. You can see quarter to quarter is really improving. Net profit is improving. So there's a very nice trend. Nothing of the drop in terms of what we see. So this correction, like it or not, ladies and gentlemen, it's a good opportunity on the goods sector. MPI, no doubt it's $38. If you look at the statistics, giving in here about 8,000 people. EBITDA, price over sales is 3.5, and going back to here again, PE of 25 times. So that's pretty good, pretty cheap too. All right, later on we're going to be looking at Apple again, very similar to what we have. All right, so that covers the Malaysian side of it, and you have seen how we use VSA 360 to get zoom into the respective market in here, and also look at the target price. Now, how to identify good stock? Earlier on you talk about, we have this red hexagon charts. Okay, all things being equal, we want it to be as further away from the center point. For dividend yield, the higher the ROE, the better. The lower PE must be lower lah, cheaper lah, but not too cheap. Okay, and also NTA to be higher. That means the net tangible asset to be higher, and also EPS to be higher. Okay, higher is better. So here, if you does a comparison in here, we want to see all sectors, meaning we want to look for best of the best. Okay, now the newer release that eventually we will have, let me just bring this up to you here. Okay, our latest on the March, I believe we're going to be releasing March, will be the ranking between the industry and sector. So we are still testing this out in here. You could see Inari is 1 out of 16, one of the best one here. And you can see 2 out for technologies. Let's take a look at MPI. Okay, MPI is second, 2 out of 16, 4 out of 109. So that tells you how strong it is. And how about LSoft? Okay, so this will be our new feature in here, absolutely free. You are getting it 26 out of 109 and 9 out of 25. Okay, so when you choose, you want to choose the strength of the company. Okay, this is how we are recommending all our members to use this, and this will be incorporated once we fully back tested. It will be in this upper top indicators in here. Okay, so, and also don't worry, we hear you. We are going to be working, the team here will be working on the US side. So you will have US, eventually the SGX and the Hong Kong at no additional cost for our VSA 360 members in here. So make sure you subscribe to our VSA 360 in here. And there's a lot, I haven't even touched on the screener that we have here. Okay, now let's move on to next that we have is just a summary of the 5 pillars of the fundamental. All things we want to have dividend higher dividend better, higher ROE, lower PE, slightly mid-level to slightly higher is preferred, not too low, because too low there's always an issue with that. Higher level of NTA, and also EPS must be higher. So EPS, we are looking at the net profit, which I've showed you earlier on. You can see Unisem here, right? On the quarterly basis, you can see margin, the net profit. Okay, if I can turn this off, I can't turn this off. No, I'm able. You can see here net profit 45, 54, 40, but we want to switch on to an annual. You can definitely see profit 9 million this year, about 140. Of course, 2009 was the COVID year, and 142. So it's coming back. It's not bad. 95, 159, 162. So we are seeing, in this case, Unisems are performing. Let's take a look at Inari for that same thing too. Okay. I will come back to Inari later on. All right. Let's move on to our next. Okay, our next part. Now let's move on to the US market. We'll be looking at the US market. What about Apple, Intel, Meta, Nvidia, Tesla, and also the Vanguard S&P 500? These are actually good stocks. Let's take a look at Apple for a start. So for Apple, what we want to do is we're going to go on to the charts here. So you can see Apple, right? We do have hitting the bottom 14% in here. This is a nice pullback, actually, a very good area to be going in, just like what we saw here. You can wait for green pentagon, but you notice here already, you can see this part, right? Already on the above zero line. So it's a good entry point. You can see here too, good entry point tonight. Pre-opening is going to open low at 172. All right, that is actually a good spot in here. But you notice there's still a resistance in here. So the market is likely going to ding dong and ding dong here. Let's take a look at the financials, okay? Okay, if you look at the financial, this was a very good year with 28 times PE, so not quite cheap, as I said before. You notice just now the earlier newsletter, they are ranking at 33 times, 35 times, but Apple growing at 28 times in here. And if you switch on to quarterly earnings here, you can see, yes, look at the net profit margin still continue to balloon. So Apple is definitely a good shares to have. Still pays a 0.5% dividend. Market cap has gone down short of the 3 trillion, 2.28 trillion in here. The rest you can check it out in here. We want to be looking at the dividend yield, the ROE. Remember the ROE, you can see it here. What is the ROE? 145%. Wow, that's a lot, isn't it? Right? Return on asset 27%. So all the statistics just blown out. Apple is one of the stocks that I have made a fair bit of money from it. I started buying around $24 in here, still holding it, and I think many of you know the reason why I have the Apple stock. Right? What do you think of this stock in here? Pencil those in there and think. Can you think of any other stocks that has done as well as Apple in here? All right. Later on, I'll be looking some of your questions that you have there. Let's look at the next one that we have is Intel, okay? Now, if you look at the market that we have for Intel, it has been a seesaw here. So what you have now is an 18% and it went down to 17%. Now Intel very similar to what we also see in the Malaysian market, in the Malaysian side in here. Market has gone down 17% for, so we are almost at the bottom here. Right now Intel is really finding struggle to move back to where it came from, the 75 cents, $75 mark. Let's take a look at the financials. Very cheap. You can see here 9 times compared to Apple is 28 times here with a 3% dividend yield. And also notice on a quarterly basis, right, the margins drop here slightly, but it still continued the 19 billion, 6.8 billion, 4 billion for the fourth quarter, 5 billion here. And this shortfall also does tell you it's not growing as fast as the stocks, but also you can look at the, what we have is Intel. Let's look at the dashboard. We have this, let me just open this up again, right, is the seasonal monthly return. I'm going to show you the seasonal monthly return here. And so let's take a look at the Apple. Switch to NASDAQ. Okay, so you can see NASDAQ here. January we have flattish month, but the big returns actually come from June onwards. You see June onwards in here, a little bit on April. So April time frame or March time frame, it's nice to be really buying. If you look back in the history, usually towards the year end, you see big rally. Why is that? Haha, because Apple is a consumer stock. A lot of people change handphone at the end of the year, right? So you can see end of the year when people purchase or buy, a lot of the stocks are reflected at then. By the time the result come out in January, good news, people sell. So you can see right now it's still in negative. Like last year when we were here at 6.8, you can see 5%, 10%, and 17. So that 17 plus 5 is a 22% rally from where I bought off in the end October. All right, so let's take a look at the other one, Intel, and also you can apply that also for, so this is really one of the real benefits of using Trade VSA 360. You can full scan how it has performed in the past. You can see here, second half, for the most part of Intel, it does seems like it has performed slightly better in the mid-year. Year-end, the rally are shorter. Okay, year-end, the rally are shorter in here. Okay, let's look at the next one is Facebook is NYSE. Okay, and we put Meta. I think it's still called FB right now. Facebook is under NASDAQ, sorry. Let's change back to NASDAQ. Okay, you can see Facebook is really going through a very difficult time right now. I think you all know about the so-called law regarding about the COVID-19 misinformation and the advertising of it. So there was a lot of pullback as well as things that backfired for the Facebook administration, and also we have seen they has lost a lot of subscribers. So we saw that big drop in February, the 29% that we've seen here. So right now it's minus 36%. So it may be true second half of the year, then we'll see a little bit more of rallying from here onwards. Okay, let's look at NVIDIA, NVDA. Now NVIDIA is a metaverse. Okay, so early on NVIDIA dropped a lot in January. That's still down 8%. But you look back, yearly returns by 100%. Right now, we got still so many months more to go, right? So definitely NVIDIA, first you start off here 9%, right? You can see it's still up 400%, right? I don't know whether it will hit 400% or not, but let's look at it realistic. Even if you hit 20% for the year from where it is right now, you're still getting another 23%. Minus 8 plus 28, that's about another 20. So that's why I want all our members in here to think of the monthly return in here. Okay, if you're just going to trade, right, and if you make one mistake, not willing to cut loss, how is your performance going to be? That's why we talk about the barbell strategy that we'll be teaching in our masterclass. And when you use the seasonal VSA 360, you definitely understand what we are talking in here. Let's take a look at Tesla. Tesla, 51%. Right now is dropped. Tesla has not lost money, you know. You think, right? 21, 20, 2009. So right now you can even see that an average was 71%. So Tesla, I think, is an opportunity in here. Of course, some people say that Tesla has gone a bit crazy. Let's take a look at the Tesla stocks here. Close this and go on to, anyway, let's look at, we'll look at Tesla, then we'll come back to NVIDIA, the stocks, okay? With the, now remember, if you have signed up already for our plugin, right? And if you're not signed up, I think this is the best time to get it. We highly recommend you to sign up in here. Lots of benefit you can see right now. So Tesla now is actually on the downside, already turned. It already hit the bottom here. You can see, right? This bottom was 34%, 28% in here, and the market now is slightly moving. So this is actually a good area to be buying in here. As I said before, Tesla, how many percent just now? Never lost money for the last 6 years, and I don't think it's going to lose money. So if you buy at this stage, invest it, right? You're getting a 10-20%, and this is the part where you can actually take some position in there. Now remember, I talk about here, do not look at the capital loss. This is a market opportunity right now in here. Tesla, let's look at NVIDIA, and then we'll look at no, we have Tesla here. Let's look at the fundamentals. So you look from the fundamentals, the PE to me is the biggest problem. 173 times PE with a 5%, but look at the growth, the potential growth of the revenue, right? The margins are coming back in here, and that's why people say that Tesla is expensive, but it is a growth. So it doesn't pay any dividend. Take note of it. Let's look at NVIDIA. NVDA. Again, NVIDIA make a big move. The last time it made about 77%, right? Right at the base here, 28%. What do you think? Can it make another 20%, 16% in here? What do you think? If it does move back to here, we are talking about another potential 30 or 40% up move from here. So on the profit target, you already know 30-40% in the ring. When to buy, also you know. Remember, you bought Tesla second half of the year, maybe starting from June, okay? And that will be a good time. And if you ramp up, or maybe end of May, right, to ramp up this, and then you can get in. So even without using technical, we already know May timeframe is a good time, right? So save your money, keep watching, continue to follow us, and use VSA 360 together with our plugin chart, and that will be one of the best tools in town, okay? Let's move on to next. We have Tesla. Yeah, we done Tesla. Let's look at NVIDIA fundamentals. Yeah, this is the fundamental NVIDIA. 74 PE, more expensive than Apple. Remember, Apple was only 28, right? And Intel was about 7. That's why Intel is the cheapest. And the most expensive one is Tesla. Let's switch to a quarterly report. You can see revenue is going 2.4, 2.3, 1.9. Revenue is going, but margin is dropping a bit more. That also, again, represent a very good opportunity of growth here. Okay, so without having a peak value line, you may not able to read it, but with this, you will know the peak and the valley, right? When the peak and valley is determined right in front of you, can you see the opportunity ahead of you? And I do hope that you can see this tonight. Okay, so let's look at the Vanguard S&P 500 here. IVV. Yeah, IVV is it IVV or Vanguard? Okay, let's look at Vanguard. S&P 500, yeah, VOO. So VOO It's where we are. The market, it's gone down, pull back a bit more. You can see, it's gone up to a 7%, 11%, a 5% pullback here, a 12% in here. Now, right now, this halfway through in here. What do you think? We have this, we need this market to move back up to this junction here. If it does move back up to above the zero, that is a very good entry again for the ETF. And we are looking about 5-7% in here. So let's look at VOO, which is it a Nasdaq? No, it's a NYSE stock. VOO, yes, I think that one. And this one will have a very nice trend. You could see VOO, it does looks like March onward, April, May, June, July, it will straighten out. You can see more green than, only one losing year was 2018. That was a trade war year with the US. And I don't think this year is the year of interest rate. Second half of the year, probably we'll see a little bit more rallying. Okay, so we covered the US market. These are some of the good stocks we are looking at in here. And early on, I did talk about the stock comparison that I've shared with you before. And also our peak valley lines, which we have shown you here. And this will be released this coming weekend, February, March. So make sure you get a copy of our peak valley together with our market stages in here. And also on March 12th, we'll be releasing our industrial specific, where we have the matching of the ranking of the stocks. Ranking of the stocks. Let me just bring it up here, and you can see Maybank. Okay, Maybank. Okay. So right now the indicator is off because we are running the background process in here. Okay, but we will come back to it. It will be turned on around after 10 o'clock. Okay. Okay, what else I'm going to share with you tonight? If you have any question, do, and also on our what's new on our timeline, these are the things we are expecting to release January and February. And we did release the US indicator, or which I haven't shown you yet. This is the US indicator in here, and you have the screener right at the below here, US sector index. And right now you could see an opportunity is on the, which one are written green pentagon? The finance. All right, the finance has turned back red pentagon, that one already. Which one has turned green pentagon? 2nd of February. XBI, the bio sector, the technology. The semiconductors is a nice one, which I talked about just now. The semiconductor still green pentagon. Lot of opportunity to move up to the old high here, as you can see before. So right now, the semiconductors, right? It's the one still green pentagon in here. Been up for 13 days, 1%. So that's how we see it. And of course, we can also go to our KLSE sector index, very similar to look at. Here we go, this one here, make it bigger. And you can see mostly we're all green pentagon. The tech sectors, has it turned green pentagon? Click on that one. Yes, it has, but we have pulled back in here. So very, very similar with the semiconductors. It's going to be a challenge, continue to go up from here onwards. Okay, so we have that green pentagon, and we have seen early on the peak valley lines has pushes it down in here. Okay, let's go on. I don't want to keep too long with you. I think, and also we want to prepare you on the Friday. So there are a lot more coming up. We are planning for year 2020. So check out on the historical release on our website, tab menu, and all these are the new features that we are coming out for our members in here. Right, the US one I've showed you before, the Malaysian one I've just showed you quickly, and early on we cover it. So whole point is to find out where are the good sectors. Put in the watches. I think I've talked a lot about Malaysian stocks today, those four, and also the US one, which is the semiconductor in here. Notice when are they turning green pentagon and what they are. So it's kind of important in here. US stock, KLSE stock, we all have them nicely. So if you have any of stocks that you want me to look at, okay, we got Richie asking for Mastercard. Okay, Mastercard. So let's take a look at Mastercard. Mastercard is starting to pull back already here, right? You can see hit the old high here, pull back. I do think now is a good time. You can see here, already above the green line in here. Mastercard, it's coming back, pull back here. It's holding up above the 2040. You can wait for the green pentagon, and I think it's actually a good time to be buying here. This one here. It's the same as Visa too. Yep, you see they all exhibit the same too. Okay, which you have seen the recovery from the 24th of January onwards. Right, the earnings. Let's take a look at the earnings too. Yeah, the earnings is positive 6% in there. And you can see right now 10 billion, 12 billion, and also the margins are pretty good. You see very high margins. I mean, 38 times 6 cent per share, dividend 0.6, 478 billion. 38 times slightly pricey for Visa. If you look at Mastercard, MC, no, Mastercard is here to type the full name. Mastercard, looking at the fundamental, click on here, hit that one, you can see 42 times. So Visa is slightly better. Okay, I hope I answered your question, Richie. Now, the key to preparing a good salad at the end of the day, I always emphasize it, is do you have a system? Do you have a recipe that works? We have a recipe, we have a good system that looks at both fundamental and technical, like I just shared with you before. We are able to identify the good entry, reward, and risk. We have also the forecast of the coming months that we are looking at. Some are as early as March, some May, some second half of the year. All right, and also we have a supporting group to develop you as a trader. Our coaches and our team here has been around for the last 20-30 years, and we are here to service you once you become a full-fledged member, or those of you who have signed up for our plugin. So you shouldn't be wasting your time with learning things that is so rudimental. You should all move on to something that could support you in the coming month, to upskill yourself, that will help you in the growing 2022 and 2023 in here. And finally in here, the market stages between the peak and valley, which I'll show you. Next weekend we are releasing. You can switch between daily and able to find the best trading rules to enter. A very simple way of looking at it. Up to you. Okay, we got Riot awaiting. Yeah, BTC, all are looking pretty good. And all this, let me just finish up. And also, coming up Friday will be our masterclass intake here. Let's take a look at some of the... Okay, we're going to be looking at BTC, USD. Okay, you can see BTC, USD, we hit the low here. Last round, it went up by 36, 37, hit here. Wow, this one here, and it's, yeah, I can start to turn green pentagon here. You can actually go in here. Let me just switch on to the crypto pentagon, because we use a slightly more sensitive crypto pentagon. Yep, that's the one. Yep, you can see here, and I'll turn off the stock one. All right, so you can see here, green pentagon, it's around the $41, which I've said here early on. When the green pentagon hits here and you have moving up, right now it's pulling back. This is a nice uptrend. You can see 34%, but I do think that usually they don't go up that quick. 22.63, this will be a pullback. I think that possibly if it does break it, you can go back and retest back here. That will be just another 53,000, but right now you should be in already in the Bitcoin. Let's take a look at Riot. Riot or Mara. So on Riot, same thing also, right? 61%, 90% move. Hit the low here, and you could see hasn't activated yet, right? This one here about akan datang. If the Bitcoin hit a bit higher, then you can see the thing move up. MARA. This is Mara. Mara has turned green pentagon already here. Okay, early entry at $25. Right, and it's holding up right now. It's $28 in here. Pre-opening about 27. Mara is a good entry here. Make sure you use the green pentagon or whichever comes in first when the market goes above the zero line here for the market stages. Okay, that will be the best entry here. Good tools, good strategy, good money management. All right, that's all you need to. Okay, and this one here is a trading stocks. So with that, we like to end our session in here. If you have any question in here, thank you for coming tonight. We really appreciate your time with us. Do share this video on your timeline. I think we have spoken about the sectors growth that we have in here, and do give us a review in our Google Play Store. And we still have seats left in our masterclass. Do WhatsApp us 0102669761 if you're interested to come for our Friday masterclass and able to get all the goodies for our market stages and our peak valley lines in here. Lots of great stuff. What's missing is you and your contribution to yourself to become a better trader. So thank you for coming tonight, and any question that you have, do pencil those in there. If not, I'll see you on Friday. That's right, Friday for the breakfast show. Bye-bye.